That's Bajaj in focus. Now, Crompton Consumer has posted a good set of third quarter earnings. They're largely in line with expectations. The company's seen broad-based growth across segments, but margins were impacted due to elevated commodity prices. Shantanu Khosla is Managing Director of Crompton Consumer. Is joining us right now to take some questions. Mr. Khosla, great to have you with us here. Thank you very much. You heard from Bajaj earlier. You're also in a segment which I guess was expecting some impetus to consumption growth. I'll get to the third quarter numbers and where you are at in the fourth quarter now. But just a quick reaction, for the consumption part of the economy, has enough been done? What's your sense?
Well, from a budget point of view, obviously the positives as we look at it is the significant thrust in investment in capital. However, this obviously has a delay by the time the benefits of it can flow down and impact the common man. So the key, and I think your earlier speaker also mentioned it, is the efficient and quick execution of these infrastructure projects, because the quicker the government can get that going, the quicker it will lead to more employment, the quicker it will lead to more money in the hands of the average consumer, right? But obviously, there was nothing immediate, but I think consistently executing these infrastructure projects with excellence will ultimately make the big difference.
Okay. Mr. Khosla, good morning. So that's about the budget, but let's come back to your earnings, which looked pretty okay. I mean, of course, there's been margin pressure, which we've seen across the industry, but revenue growth of around 6.5%. Your lighting products business went up about 8%. So it's kind of single-digit growth that you're seeing. What kind of growth do you envisage for FY23 across segments?
Yeah, first, just to put the growth in context, because of the COVID waves coming at different times in the base years over the last couple of years, a more consistent way to look at the growth, we believe, is actually look at a 2-year CAGR, because that sort of evens out the fluctuations. On a 2-year CAGR basis, we grew at about 15% this quarter, which is actually slightly higher than the growth rates we were having in the pre-COVID period. So demand had begun to pick up nicely, broadly speaking, across most segments. However, then of course we got the Omicron wave, which hit us with such speed and intensity. So that specific wave we saw beginning to soften and impact demand from about the end of December and through January. And clearly there was an impact of the intensity of the waves, rolling lockdowns, some amount of impact on actually the consumer's confidence, if you will. That being said, if we look at the past experiences we've had, the recovery in terms of demand has tended to be quick and sharp. And at least looking positively into the future, we can now see that Omicron, fingers crossed, seems to be in control. Infection rates and illness seems to be coming down. So if that continues, we do expect demand to rebound back pretty quickly over the balance of the quarter.
So where will margins be at? Gross margins contracted for you. EBITDA margins also came off a little bit. Will you have to take more price increases? Just give us a sense there on margins.
Yeah. Firstly, yes, there was a slight reduction if we look on quarter-on-quarter, year-ago basis. But if you look on a going basis, our margins are now pretty much back to pre-COVID levels or pre-inflation levels, I should say. As we all know, the commodity costs over the past 12, 18 months have been once-in-a-lifetime kind of increases. And we, as have other members in the industry, taken significant price increases over the past 12 months. Our margins, with a combination of price increase, cost reduction, and premiumization of our portfolio, have recovered pretty well. And especially if you compare them to our peers, where our margins are now kind of holding As we look forward on commodity, towards the back end of the quarter, commodity price increase started easing off a little. We are not seeing any sharp increases as we get into this quarter. So again, we're hopeful that commodity prices will stabilize at the levels they are. And if they do, we should not have to take any significant further price increases more than what we've already done. Of course, if commodity prices rocket again, then we'll have to relook at that.
All right, we leave it at that, sir. Thank you so much for joining us and giving us an update on the business. Let's take a quick break on that note, but coming up...